Doth my eyes deceive me? Deceive you? No, they don't. This is the hot corner, and we are not Steve Straza. I'm Spencer Israel, and that's JC Peretz. And Steve Straza is somewhere over the Pacific Ocean right now, landing, I just learned, in about 5 hours. Obviously, you can't host a YouTube show from the air. Actually, maybe you could.
Not yet. Not yet.
We're not going to do that. Even if you can, we're not doing that. So what we've got is JC and I here with the slides that Straza would have been here to go over with you with, but we're going to do it. So this is how it's going to work. We've got our charts, we've got our insider transactions, and we've got time. So let's start off as we always do. Straza likes to do a little bit of a macro talk at the start of this. So let's do some macro talk first. We have a few good charts here on the macro front, and then get into the stocks in our hot corner universe that are showing strength and also insider transactions. That's what we look for, right? So let's start with the macro stuff. Chart number one is a chart. Oh, the disclaimer. Obviously, we always have to put the disclaimer up. Chart number one is the NASDAQ and the S&P 500. Both showing new one-year highs, JC. What say you?
Well, it's funny you talk about Straza up on a plane. We know that. We saw a picture of Straza up on the plane. Number two, you talk about how he likes to start out with the macro. I can't imagine where he learned that from, Spencer. I can't imagine where that came from. Good old Straza. No.
You know what? Actually, quick survey in the chat. If you like the macro talk at the beginning of this show, drop a 1 in the chat. And if you don't, if you're like, just forget the macro, I want straight stocks, put a 2 in the chat. I just want to see where everyone stands.
The thing is that what people like about our macro is that we get right to the point. It's like macro that matters, not like the unemployment claims in Malaysia. The yield curve in Italy. Like, we look at all that stuff and we incorporate it in our analysis, but we're not going to make game-changing decisions based on the GDP report in Spain. Right? So these are the trends that matter. I don't know if you heard, but the NASDAQ and the S&P 500, kind of a big deal. I'd argue they're top 3 most important stock market indexes in the United States, right, Spencer?
Top three. I would definitely say that. Yeah.
We can agree all top 3 right there. And they're making the highest monthly closing prices in over a year. In fact, they have made new one-year highs 3 consecutive months. So it's not like this is like this groundbreaking, unprecedented behavior. There's precedent in the fact that it has been happening. It's not anything new. So here's the zoomed in look at the S&P 500 making new 52-week highs. Classic characteristics of uptrends. Go back in history, study all the uptrends in history. You know what you're going to find? You're going to find a lot of new 52-week highs along the way. So that is a characteristic of an uptrend. Obviously, it doesn't need to be said, but I guess people might be confused about that. Things could change tomorrow, most definitely. You can't argue that stocks haven't been going up over the last year. They most certainly have. In fact, things really sped up for the NASDAQ as we got that rotation to growth at the beginning of the year. And the NASDAQ got off to its best start in history, actually. I was promised a recession, maybe even a crisis if we were lucky. But in fact, it was actually the best start to a year of all time. And you can really see from a seasonality perspective, this is what we're looking at now in the dark blue. It tends to maybe, I guess it's been outperforming the other areas, tends to do weaker, I suppose, right? So showing relative strength from a seasonality perspective. And a lot of that is really being driven by that rotation. At the beginning of this bull market, starting off last summer when the new 52-week lows list finally peaked, things started to improve. The leadership groups were the more value-oriented groups, is really what it was, as interest rates were really spiking. And then a funny thing happened. In the fourth quarter, interest rates stopped going up, and you got that rotation coming into the beginning of the year. Some of it started in October and November, depending on which growth stock you're describing, but you saw it. Anyway, and then in the beginning of the year, you really saw the transition into growth, but industrials really let it off. And now here they are getting rotation over the last month, 6 weeks or so into industrials, into some of those areas that are not those mega cap growth areas. And there's a lot of different types of industry groups in industrials, like a lot of different types of stocks. So it's a very diversified group of names making new all-time highs. Is not a negative, most definitely, right? It's kind of breaking out above those levels. Financials, holding the levels that they need to. These are the great financial crisis highs. I have argued consistently. These are arguably some of the most important stock market prices of all time. Literally, the highs in financials before the great financial crisis. Like, how is that not, at least in the conversation of one of the most important price points in history? Nevertheless, those were the highs in 2018, again, right before COVID. So clearly a very important level, not just my opinion, using common sense, like, hello, the highs before the great financial crisis, a kind of a big deal. To me, that's common sense, theoretically. Now, in reality, which is what really matters, not what JC thinks about in the middle of the night, is whether the market actually respects that or not, or is just JC making shit up? And as it turns out, the market has definitely respected that as it peaked in 18 and again in 20 before COVID. And then we ultimately broke out after COVID and came back and retested those levels, right? So day 2 of technical analysis kindergarten, you learn polarity, right? Form of resistance tends to turn into support. That's exactly what we're seeing here. This is called polarity. So as the argument that we've made is that if financials are in fact above those great financial crisis highs, then all is well. It's Kevin Bacon at the end of Animal House, like all is well, remain calm, That's what that is. And it has held in. It has held in. So seasonally speaking, for the S&P, this is not a negative, sell in May and go away, something that they talk about. We don't actually do that. In fact, July tends to be a good month, a positive month within a seasonally weak period overall. So from a seasonality standpoint, still tailwind, obviously, maybe not obvious to you, but for us that we talk about this, pre-election years, historically, the best years of the 4-year cycle. NASDAQ's off to its best year ever. So stocks are behaving the way that they tend to behave this time of the year. It's actually perfectly normal. If anything is unusual, is just how unusually normal the market is behaving, right, in this environment. Like, sector rotation, new 52-week highs. We got the most new 52-week highs that we've seen in 52 weeks. Like, we're seeing, Spencer, let me ask you this. Is a new 52-week high in the amount of new 52-week highs, do you think that's a negative for the market?
Oh, that's bullish. I like it.
It might be bullish. I would argue it's definitely not negative, right? So we can knock that one out. How bullish is it? How neutral is it? I don't know, but we don't look at it as a negative, certainly. So let's take a look at these. So JP Morgan, great example. This gentleman, Scott Franklin, I guess he's in the House of Representatives. This guy bought some shares at JP Morgan now in April. This Mr. Franklin fella is making some money. Good for him. I was told we were in a banking crisis. Scott called bullshit. He goes, nah. JP Morgan's going to get that money. And sure enough, he put his money where his mouth is, and he's making a lot of money. Good for him. I like JP Morgan long if we're above those highs from earlier in the year. Got to be long this name, target back up towards those 2001 highs. Plenty of room to the upside. And if JP Morgan's making new 52-week highs, whether you're going to buy JP Morgan or not, that's information. It's information. It's in the index of the world's most important stocks, right there, Spencer? Dow Jones Industrial Average.
Yeah, sure.
Best index, JP Morgan's right in there. And if JP Morgan was not in there, Spencer, I would make it the 31st or the 32nd perhaps, and I would make my own Dow Jones Industrial Average. But fortunately for us, JP Morgan is already in the Dow Jones Industrial Average, making new 52-week highs, not bearish for the market. Here's Microchip.
So just for context, these are all new ideas from the hot corner universe. JP Morgan, Microchip. These are new. These are charts that are just now shaping up to get on our radar.
So here we're looking at semiconductor stock. This one's from Arizona. There, Spencer. You like Arizona? 50 billion market
Arizona. Cap. Yeah, I love Arizona.
Arizona's pretty cool.
I feel
like if I'm gonna go all the way over there, I'd rather go to San Diego. Am I just being mean?
Same difference to me. It's all dry weather.
Stop it. Oh, I don't even want to hear it.
What's interesting about both Microchip and JP Morgan is you can see the Form 4 on the screen there. That's what got this on our radar initially, but this year, not that this really means anything, it really doesn't. But a lot of insider selling in Microchip and JP Morgan, for that matter. Most of it, I'm assuming, is just routine selling. Nothing to make of that. But you bring up a good point there, Spencer. One of the things that Spencer was like, oh, it doesn't matter, but I want to bring it up, and I'm like, why would he bring up something that doesn't matter? I think this is a really good point because an insider, particularly somebody that works for the company, they could be selling stock for a million reasons, right? Pay for a daughter's wedding, college tuition, just normal diversification because they own
a ton of this stock. Their own compensation is based on this. Like they have enough of their life exposed to this company. There's nothing wrong with selling some. In fact, that's a smart thing to do, right? Doesn't necessarily mean they think the stock goes down. Number one. Number two, when they buy it, there's a lot of different ways they can buy it. You know, there's like exercising options and planned purchases. We ignore all of that stuff. We're specifically, like if you look at the actual Form 4, there's a P. There's a letter P. I've learned this because my friends are nerds, but there's a letter P that you know that's a purchase. They called their broker and bought the stock in the open market just like me or Spencer would, like a normal, you know, not planned, completely out of nowhere. And I can't imagine why they would want to do that. Do you think it's because they think the stock goes down in price, or is it because they know something and the stock is going to go up? So that's why we ignore the selling and we focus more on the buying. But to be fair, Spencer, we are optimizing in similar ways that we've optimized our buying algorithms. We're looking for the really aggressive selling where it's going to start coming on our radar. Like we haven't quite we kind of have. We haven't shared it with the public, but we're working on some really cool stuff where we can just overwhelming selling. It doesn't mean we have to sell too, but I kind of want to know if there is like ridiculous off the charts selling. So we're working on that right now. So so anyway, little fun fact. That's a good conversation though, Spencer. It's a good point. Anyway, if it's above 90, who gives a damn? We want to own it, right? Like, let's be serious. Like, that's what this is all about. You know, we're here to make money. Right now, this sucker is down 2%, near 88, so below 90. So below 90, you want to leave it alone, right? For obvious reasons. It would keep it below that overhead supply back here, right? We really want to be long if we're above 90. So here's the USFD. A director filed a form for 1.7 million.
Three directors. Three directors. Right. This was back in March, and you don't see this every day. One of those directors actually more than doubled his stake in this company with this transaction from March. He bought what did he buy? 31,000 shares is what he bought. And that more than doubled his stake. These food companies keep coming up in so many scans. You know, they see it, obviously. You're seeing it in the stock prices and a lot of these other food companies. I mean, it's good business. Clearly, they're doing something right, showing relative strength, already making new all-time highs. Just another classic characteristics. What a $10 billion company. Who were we talking to the other day on the morning show where they were talking about how they thought the SMIDs were going to outperform moving forward to small caps and mid caps? I forget who it was. Do you remember, Spencer? That Redler or
no, that's too long term for Redler. I don't know. One of them was. I totally agreed. Maybe it was Mark Newton. Maybe
was it Gordon? It may have been Todd Gordon.
I'm not sure, but anyway, the small caps and mid caps, and here you are looking at $10 billion food distribution. You know, keeps coming up on our scans across the board. Above 43. I like this one long. Target up near 64. Gives you some exposure to defensive that have gotten really beat up. So if you're looking for some exposure in some of the more defensive areas that are not technology or industrials or some of those areas, like I could tell you firsthand, I have no exposure whatsoever to anything defensive. The most defensive thing I own, I think, is like HSBC. And there's just really nothing defensive about that. But that's as defensive as I get, to put things in perspective. So maybe I'm going to personally look into the USFD. Above 43, I like it long, target up near 64. And then here's the Pure Cycle. Listen, man, $6 million is not nothing.
And just to be clear, that's a transaction from last year. There hasn't been any notable buying this year, but that $6 million transaction from the CEO last March is what got this on our radar. And you can see.
Well, he's making money. Right, he's making money on this transaction clearly. So, Mr. Feeler Jeffrey Richard, this director here at PCT. So, PCT, we're talking about a pollution company. Here we go. Great example of a situation where they don't know what to do with the stock, so they just throw it in industrials. Right. So this is an industrial stock. It's a pollution and treatment controls. Right? Isn't it funny? Like, it always cracks me up. Anyway, so this sucker here is this sucker's a $2 billion market cap. All right, I see you. Based in Orlando. All right, so they clean shit up in Orlando. Nice base here. If we're above 11, I like it long. Target up near 16. right? $6 million, man, from the CEO. How rich do you think this guy is? This guy's throwing around $6 million in a pollution treatment company, $2 billion market cap. I mean, nice base here.
Well, I'll tell you what his ownership stake is. How about that?
How much is this guy on?
He owns what's his name? He
Taylor
owns
Jeffrey Richard.
He owns about 1.9 million shares. Of
how much money is that? I didn't know there'd be any math involved.
Yeah. Well,
he owns quite a bit.
PCT.
Listen,
I don't know. So
at the end of the day,
what's 1.9 million times 11? There you go. That's just his stake in this company.
So for us, this reiterates a good point, right? As soon as they get on the map, as soon as they get on the radar, we're not going to put on the position because the CEO bought this much or the senator bought that, or or the 13D filing from Icon or whatever. We're not going to buy it because of that. All that does is put it on the radar. Once it meets here, I don't discriminate at all, right? We are equal opportunists. Whether it's the CEO buying or if it's a 13D or Nancy Pelosi's YOLOing Tesla, whatever. No discrimination at all. We are purely putting on trades by the merits of price. All those transactions did was call our attention to it. That's what it's designed to do, just to be clear. And this one, regardless of whether it's $6 million or $6, got on our radar. And if we're above 11, I like it long, target up near 16. I like the fact this guy's buying. Very cool. Here we're looking at Harry Brandler. Here's the director at Green Brick Partners. This keeps coming up. GRBK. This one came up on the buzz over the chart report.
It's new for this scan though. Well, sorry, not new for it's a new idea from our universe.
Yeah, this one coming up in the chart report does this the buzz, obviously but for those listening, which is very cool. So it came up on this. So there's a lot of chatter on social media. Here we're looking at a residential construction stock. This guy, Harry Brandler, wants to put $500,000 there. It's a $2.5 billion company. Nice base. Listen, below 58, leave it alone. Let it finish basing. I don't know. I mean, it's come a long way quick. It's in the right space, I'll tell you that much. So you're certainly getting the beta out of a lower market cap residential stock versus some of the big ones like Lennar and some of these others have just been crushing. So you're getting more beta here. So meaning they move when they're all going up, they move higher, faster. When they're all going down, this one's getting destroyed. So that's what we mean by beta. Here we're looking at Antero Midstream.
Wait, hold on though.
Sure.
That was it for the new ideas. From here on out, these are all names that were already long on the hot corner. The hot corner is long. These names. So Steve.
Well, here's a $5 billion oil and gas midstream, right? So it's like, the gods of the insider transactions, we're listening. Something I'm interested now in some of the sector rotation that we've been seeing is whether or not we get a back half energy rally. So this evening, we have our premium members conference call where we're going to be really breaking down the energy space, not just oil and gas, but coal and uranium as well. If we get rotation in there in the back half of this year, I think there's a lot of catching up to do. Coming in a longer term rally, and some of these midstreams could be a part of that. This name in particular pays an 8% yield. So a lot of these pay very handsome yields. These are really transporting the oil or whatever it is that they're transporting, probably oil of some kind somewhere, who knows. And pays a really handsome dividend. So if energy is working, these things tend to work, and you're getting paid to play. 8% in this case, not too shabby. If we're above 1170, I like this one long. Target up near 15, get back up above there. But if this thing really gets going in the back half of this year, you could see 23 here. CFO and vice president here are buying not too much money, but something. Definitely got us on our radar. So this is an interesting one as well, for sure. Here we're looking at this one, ZNTL.
Dude, this is the one that had the doozy.
Quite the base here, man. And you're seeing a lot of that. Have you noticed that there's just a lot of bases that look exactly like this?
This is the one that had, yes, to answer your question, but this is the one that had the doozy of, and it's on there, it's up there on the screen there, from Matrix Capital Management. They acquired about 5 million shares of this thing. They raised their ownership stake 50%. You can see it right there, from 13% to about 20%. So, huge buy.
Dude, $108 million. Like, That's like a lot of money, like $100 million.
Yep.
Like here we're talking about this guy over here with his $100,000 transaction. This guy with his Piker buy, and then this guy, here we go coming in, boom. So this is a big deal because it's a small company. It's only $2 billion. So they're buying $100 million worth of a $2 billion company. So this is a biotechnology stock in New York. I have no idea what sort of biotechnology they are doing. I hear from Straza, they got a whole bunch of stuff. If you're interested in that sort of thing, knock yourself out. I've had enough biotech fairy tales told to me throughout my career that I've just lost interest. It's too much for me. In the old days, they would take me out for steaks and tell me about their drugs and
tell us more about what they would tell you behind closed doors.
Well, it's not so much behind closed doors. They would pitch me, so we bring it to our customers and stuff like that. Like, I understand they're trying to bring liquidity and stuff and attention to their company. I totally get it. It's just not for me, right? I'm not a doctor. I don't know anything about the science. No thanks. I'd rather look at the chart and be like, all right, these guys like it. I'm sure they did their homework, right? I'm pretty sure they're putting $100 million in the thing not because they think it goes lower. So anyway, they know. I don't know. Like, I don't even know what drugs these people, I don't even know if it even is drugs. It could be medical devices. I don't know. No, it says biotech. So the point is, if we're above 32, we want to buy it. I don't know anything about this company, but these guys do. $100 million. Below 32, they're on their own. Above 32, I like it long. Target up near 43. Here's Belden. BTC, man. This one keeps coming up in conversation again and again and again. Dude. So their executive vice president buying $500,000. All right. So here we're looking at a $4 billion stock. This one in the it's technically a technology stocks in the communication equipment sector. Again, getting back to the SMIDs, smalls and mids out there, not getting a lot of attention. Clearly, this executive vice president likes it. This base is a huge base. I mean, we're above 95 right now, so it's like now or never. I'm not convinced that it's not going to take a little bit more churning to break out. I'd be a little patient with this one because if we're not above 95, you can't own it. That puts us below those former highs, right? So got to be above 95. Target up near 138. And then, of course, micro strategies for you Bitcoiners. My understanding was Straza was actually trading Bitcoin miners, probably Bitcoin miner options, if I know him.
That's what I hear.
On the plane.
That's what I hear. That's what I hear.
And it's actually up 2.5% today on a down tape with Bitcoin down too. Interesting relative strength. I mean, I'm personally thrilled about it. I own it. Mara, I'm talking about specifically. Now, MSTR is really the de facto ETF for Bitcoin.
No. It's the de facto leverage play on Bitcoin. Because they only exist to own Bitcoin. That is the reason this company exists. So
just to own Bitcoin.
You get all the volatility of Bitcoin with plus the volatility of management and equities. So
listen, I trade it. I trade it all the time. Are you kidding me? We actually treated us pretty well because on the way down, we never traded it for whatever reason, like not short or anything. I'm pretty sure we never shorted it. Anyway, I don't remember it shorting, but from the long side, we definitely have. It's a great vehicle. I mean, I'm personally in the Mara, but it's a similar trade. Like if I'm making money in the Mara, I'm probably making money in the micro strategy. Similar trade. I already own Bitcoin. Like I've got enough Bitcoin, so I'm trading around, the prices with options and things like that. But it's a trade on Bitcoin. We know what's going on there. Like this doesn't even matter. You know what I mean? Like I hate to say like it doesn't matter. But I feel like if there's ever going to be an insider transaction that doesn't quite matter, I think it might be this one. But it's funny. Above 350 though, that's great. Another great example of who cares? Like this is just bringing it to our attention, right? And that's exactly right. Above 350, like it long, target near 500. Here's IES Holdings, IESC. So this gentleman bought 150,000, kind of a piker purchase there, Spencer, no?
Yeah, small. Yeah.
Should we be impressed? This is $1 billion company. 150 grand, that's all the guys got?
Well, before we say that, let's hold on a second. Let's see if
So this is an industrial stock out of Houston.
Yeah, it's not. It's not.
David Gendel. David Gendel, this guy. He's not putting much money.
This is not no, there's not no.
Small company.
There's nothing to see here. From a transaction standpoint, not from a chart standpoint.
It barely trades. It's a small company. I mean, it's $1 billion stock, so it's got $1 billion market cap, but barely trades, so really thin. But, interesting thought here. Another industrial small cap, though, right? So another industrial small cap coming up. We keep seeing the industrial small cap index was already making new all-time highs, by the way. And industrial mid cap index was also before the industrial large cap. So the fact that industrial large caps just closed a new all-time high should not be surprising because the higher beta others were already doing so. So it was really only a matter of time. This gentleman here, Richard Blumenthal, this is a popular fellow, isn't he?
Yeah, the congressman. Yeah, he's active.
This is a senator. This guy.
Yep.
This guy, Richard Blumenthal. All right. I don't. He sounds familiar. I feel like I should know this guy. No,
it's because he's in the news a lot.
Is he?
Yeah.
I guess he's from Connecticut, so he's a senator in Connecticut. All right. So the senator in Connecticut is buying APG. That's the situation here. Senator in Connecticut.
Yeah.
Richard Blumenthal.
I use.
Should we feel bad that we don't know who he is?
No, we know who he is. I use like Straza as like my tracker for the congressional buys and sells. So when he's not here, I'm like totally lost. But
another industrial, man, another mid cap industrial. This one's engineering and construction. Throwing some money around. I think it's right here above 27. It's very close. It's right here above 27. I like it. It's come a long way. So it's one of those examples that have come a long way. I don't know if it's just going to rip right through on the first attempt. Could take another or two before breaking out. But above 27, I like this one long for sure. And then here's Extreme Networks, EXTR, another Form 4, 100 grand Piker purchase, 100 grand from Kathleen Holmgren.
I was going to say all these charts have the same thing in common in that they're all breaking out. You can just go 2 seconds at each and just look, break out.
$3 billion communications equipment, right? Above 24, like it along at 38. What's that?
You want to jump ahead to SoFi here?
Yeah, sure. So here's FDA Aviation.
That's a more interesting. Yeah.
This is a big one. Are you kidding me? Look at this. Above 30. I think you got to own this one, man. This thing's a beast. $1 million Form 4, Martin Tuckman. This Martin Tuckman throwing a milli down on the FTAI. Why do you want to jump through this? You don't like, is this beneath you? Are you too good for this?
Yeah, I mean, these are names that Steve's been talking about.
I mean, this thing's an absolute beast. He should be talking about. I mean, who knew? Great example here, Spencer. When they don't know what to do with the sector, they just throw it in industrials. This one's in rental and leasing services.
Well, right? it's got aviation in the name.
It does. So maybe they're doing rental and leasing services for aviation companies.
I'm just reading the tea leaves here.
$3 billion. There's some liquidity here. $3 billion stock above 30. I like this one. Target up near 39. Here's GLBE above 38. Target near 57. Right. These are nice breakouts here. Nice 13G filing. And then here's SoFi. You're such a junkie, Spencer. Can we get to the SoFi? I love it. I love that about you.
I am a customer. I am a customer of this bank. They are my primary banking.
Are you happy with them? Is it cool or no?
I am happy with them. I was not happy with them at the account creation process, but once I got over that hurdle, I'm very pleased with them. It's pretty good. Anyway, Anthony Noto, the CEO, has been buying this thing a lot. Going back to last year. He has been, or maybe even 2 years ago. Going back 2 years ago, this guy has bought a lot of stock, a lot of this stock. He went from owning 2.2 million shares, and now he's tripled his stake in the last 2 years.
Well, maybe he's doing that because he thinks the price goes up there, Spencer. What do you think?
I mean, someone's got to think so. The price is going, it is going up.
Well, it hasn't for a while, and now things are starting to get going again. But you got to be above 850. It's a big level for me. Those are last year's highs. Again, highs early in the first quarter as well. 8.5. If we're below 8.5, it's not for me. Above that, I think it's got upside towards 13.5 or so. Here's Ecolab, AECL, David McClellan. Piker purchase only 100 grand. Come on, David. You got to be throwing around more loot than that. 100 grand. That's all you got.
Give me more.
Come on. Target up near 200 there, right? And then here's a Dynatrace, man. So what do you think about this? Keeps coming up in some interesting scans, right? Great example of one of these software stocks. This one, 15 billion, right in that sweet spot of the SMIDs. These are small and mid-cap stocks, to us, and software, quite the poster child for the previous bear market and the transition into some of these other growth areas. Software has been very representative of that, sort of like outside the AI semiconductor space, right? You see what I'm saying there, Spencer? The whole world does not revolve around semiconductors and Apple and Microsoft. There are software stocks that in the old days, in the previous bull market, were the sexiest stocks, right? So the fact that they're catching a bid, breaking out, I think that's further evidence of the strength, broadening strength in technology, not just in semiconductors. So target up near 60 there. Here's Toast, TOST. Another one keeps coming up in conversation. Above 23, I like it long. Target up near 34. PGI.
What I was going to say about Dynatrace real fast, you're not much of a 50% retracement kind of guy, I think. Listen, 50 wasn't good enough for Leonardo Fibonacci. So who am I to say that I am better than a one big Leo? Who am I? I was going to say the peak to trough 50% retracement is $58.
Right.
We're at 51 today. So
listen, when you change the history of mathematics, I will do it your way. In the meantime, I'm going to go with my man Big Al.
Toast was it a SPAC or was it just an IPO? I think it was just an IPO.
Dude, you're so racist against SPACs. You hate SPACs. Why do you hate SPACs so much?
It's true that why do I hate SPACs so much? Oh, come on. Look at the performance. It speaks for itself.
Dude,
because
you're such a hater on SPACs.
I hate what these SPAC issuers and the companies that they merged with. I hate what they did to retail investors. But
can't hold a grudge in the market, man. If it's going up, who cares whether it was a SPAC or not?
This is not going up, I think is the point.
Well, it's certainly an underperformer, right? But we start getting above 23. I think you got a shot. This guy Paul Bell over here seems to like it. PGTI, Richard Feintuck over here, dropping $200 on this. All right, that's all you got there, Richard? Come on, man. $200. PG guy. What?
No. I was moving on to. I was on
$1.6 billion small cap industrial. Yeah. Once again, man, these things keep coming up again and again and again. Above 26. I mean, this thing's beautiful. Target up near 38. I got two more here. Here's Uber Technologies. I want to compare that to Lyft. This is interesting. $5.3 million, Spencer. I know that's just a drop in the bucket for you guys, but for a lot of us, $5.3 million, a lot of money.
And that was from Dara. Damn it, I'm not even going to bother with his last name. I can never say it. He had a pair of transactions a little over a year ago, and he's done a great job. The next chart shows it. I mean, they've been lapping Lyft.
Donna Koroashkashani.
It's I should know it. I should know it.
You said it well. I think you said it. Didn't you say it well?
I didn't even attempt it. I'm not even going to attempt it. It's Khosrowshahi, I think. But
that's pretty good. Anyway, that's good. That's good for me. All right.
The Uber versus Lyft chart speaks volumes, I think.
But look where they bought, man. Look where she bought. Dana.
Dara.
Look where he bought.
Yeah.
Literally at the bottom.
Right. Yes.
So that was around 20. Yeah. Nice trade there, buddy. So that's why we sort of monitor these things.
It's true. It's true. He bought in May of 2022.
So he's already got a double on that. So that 5.3 is now worth over $10 million. Shout out. Nice trade. Listen, good credit where credit's due. He knew that the world was not ending. When everybody thought they were, this one really bottoming out when the overall market bottomed out last summer. The new 52-week lows list finally peaked. This thing, the good example of the ones that got going. You remember, the S&P and the NASDAQ and the Dow made new lows in October, for a day, and then recovered. But look at Uber already making higher lows, right? So it's essentially doubled off those lows. It showed its true colors early on. So, listen, leaders lead. That's what happens. Money goes where it's being treated best. If we start breaking out above 45, I like this one long with a target up near those highs, near 64. Just look at the difference between Lyft down near all-time lows, while Uber, getting monster transactions from its CEO. Really, really interesting, performing well. Big difference there. What do you think there, Spencer?
Yeah, I mean, it's making me wish I owned it, which I don't. But can't own them all. But,
Can't own them all, Spencer.
Yep.
Can't own them all.
All right. Give us feedback on how we did. We're going to be doing this 2 more times while Straza is gallivanting over in Asia. But there's an email address on the screen. Email us with feedback. JC and I will be back to do this again next week. I think maybe with I don't know, actually maybe I don't even know. Never mind. Smash the like. You can always get this email, the Hot Corner, for free. It goes out every single day of the largest notable insider transactions, both from CEOs and from Congress people and from company executives or large hedge funds. You can email the email that's on the screen. You can also email us questions at stockmarketmedia.com. We'll get you on that free list. And this show is once a week, as you guys know. So Jonathan says, excellent as usual. Thank you very much. But we miss Steve dearly, and it's only been in one day. All right.
That was great.
I had fun. I know you had fun. You always have fun. That's a wrap. We'll see you guys later. Have a good one.
Adios.